right, everybody, how are we all doing as at the close on Tuesday? I hope, of course, that you are doing well. You are remaining rather disciplined and also patient. That is going to pay in this current market dynamic. Obviously, the volatility, again, it still continues to surge. We are seeing very quick pushes to the upside, followed by, again, a retracement off from those past gains that the market has priced in. We sort of pontificated on this yesterday. We spoke about the odds and the probabilities of the markets collectively pulling on back down, or how we wouldn't be surprised if they chose to do so, to actually close these open windows. And as you can see on the chart of the S&P 500, here we are. We closed down just over 23 points. And the majority of those gains that were made between Friday and Monday of this week's session have largely been given back as at the close on Tuesday. I don't think anyone in this public forum here would be all that surprised by simply what is happening in the market. What's most important at this particular juncture is that you are not fearful, you are not panicking, and that you're not afraid of a deeper and larger correction. As it stands, this support area, it continues to hold. And in fact, contrary to public opinion and public belief right now, what would be the most bullish outcome short term for the market would be to see these markets collectively come on back down and, at the very least, close this first open window up here just shy of 2,900, but more specifically to come all the way back down to roughly 2,860 to close this ultimate window down here, right where we've already had 3 successful retests of this critical support area, which is really shown and illustrated by these lower wicks indicating buying pressure prior to the bullish rally taking off. That is what you want to see, and that is what I'm pontificating right now about, is that the market, or what the market is going through right now, is the process of closing these open windows. Again, it would be contrarily negative, and it might be hard to interpret this or to understand this, but it would be somewhat bearish for this market to take off immediately above 2,946 without closing these open windows. Naturally, we need to go through the ebbs and flows of the market. We need to hammer out volatility. We also need to hammer out a base. That is exactly what appears to be happening right now. And again, to close these windows would be going through a checklist for the markets in order to set up a sustainable and a legitimate base and a rally off from this support that we have been really establishing for the entirety of August 2019. I know it can be difficult if you're sitting there being, or at least feeling, a little bit frustrated by the way in which the market is operating, or by the sort of the current dynamic of the market. Just understand that right now there is obviously a battle happening between the buyers and also the sellers, whereby, again, day to day, they're sort of rocking the boat. They'll wake up one morning, they'll be on one side of the boat, and then as at the close and the transition to the next day's worth of trade, everyone's running to the other side to essentially do the polar opposite as to what they did the day before. That is exactly why we're seeing the buyers show up, the sellers show up, the buyers show up, and now essentially it looks like the sellers once again in the short-term dynamic have control of the market. This is going to settle. I cannot sit here in good faith and tell you definitively when it will settle, but again, we've pontificated that we are moving potentially into a Bollinger Band squeeze, and essentially that is what looks to be the case the further we move sideways. The reason I say that is because when you look at the Bollinger Bands, it appears as though the market is doing everything in its power to actually pull away from the lower Bollinger Band, which is technically bullish, but at the same time, we still haven't seen that lower Bollinger Band turn up yet. If you are to see this, and I'm essentially saying that really look for this to play out over the next couple of sessions. If we continue to move sideways, you should see this lower Bollinger Band turn up. The top band will begin aggressively turning down. And essentially what will happen is that we'll move into a period, hopefully, of a Bollinger Band squeeze, a Bollinger Band type of setup, whereby, again, what happens during a Bollinger Band squeeze is that, again, volatility inevitably becomes suppressed until we see a volatility breakout. Now, that volatility breakout historically is generally in the direction of the prevailing trend. And I wanted to zoom out and just show you this and ask you the question and ask you, well, what direction is the trend if you wanted to really just begin at the turn of the 2019 calendar year? And although if you go out a little bit further, I'll be the first one to admit that the market itself is rather trendless still at the current juncture. But if you are to take the 2019 calendar year and just think about the higher lows, which are still establishing themselves, to me, this looks like a textbook bullish continuation pattern. And it really gives merit to the market itself basing, moving into a sideways direction, building a base prior to the continuation of the markets to take out the most recent swing highs in the period of July 2019. So again, I just wanted to reiterate, be patient. This isn't going to work out by Wednesday's session close. It's probably not going to work out this week, but understand where we are. Understand what's happening in the market, not only for the S&P 500, but also for the Dow Jones and the NASDAQ, and it's nothing to be afraid of. Okay, it's giving you the opportunity, again, to leg into long-term positions on the market slowly, to continue to accumulate, whereby we're going to see also these oscillators, right, flip from what have been somewhat oversold territory, or the indicators themselves pushing into or very close into oversold territory, which is going to work in combination with the Bollinger Bands if we see that squeeze set up, whereby, again, you're going to see the volatility break to the upside. That's what I'm expecting. That's what I'm, again, continuing to position myself. I haven't actually sold a single call that I've been accumulating over the past number of months, if not potentially some of those trades are bordering on a year now. And I'm very relaxed, very calm, quite content sitting here, understanding that the market itself is operating, right, generally as how we would expect it to. Okay, obviously we're not going to get the day-to-day movements in this erratic sort of polarized market correct every single day. But again, this is a very natural continuation off from a basing pattern. At some point in time, obviously, this is going to run its course. All I'm saying is that when the market chooses to do so, and when these open windows are technically closed, they don't necessarily need to be closed, but if they were to be closed, it would be a very bullish signal, especially if we held up above what has been the support area for the entirety of August. Okay, so just sit on that, think about that, digest that, and just feel content knowing that the market itself is acting as it should. I wouldn't buy into the doomsayers out there. I wouldn't buy into the analysis or the market pundits who are saying that there's a deeper or a larger correction, or that we're on the precipice of a recession like we were back in 2007, 2008, that transitional period whereby, or which led anyway into the market lows of 2009. That is still a long way ahead of us, and as such, this is still a healthy correction back into the intermediate trend line, which is working in conjunction with the macro trend of the market since 2009. You don't need to read into anything more than that as per the technical outlook and the technical standing essentially of these markets combined. Now, when we have a look at the NASDAQ again, down 54 points, what I didn't like about yesterday's session, and I tried to speak about this, was the simple fact that we were setting up a bunch of doji candlesticks. And generally when you get a doji candlestick in a gap up, which goes nowhere, during a period of a sideways consolidation, a very short-term sideways consolidation, generally it's not a very good sign. And again, it leads me to believe that these windows are in the process of being closed. So everything I just spoke about with the S&P 500, okay, this is now the chart of the S&P 500, is directly like a parallel anyway into the world of the NASDAQ, which seems to be going through the same sort of makeup at the moment, down 54 points today. And also when I transition into the Dow Jones Industrial Average, this is probably the closest of the three markets, which has actually filled that first operating gap. Now, again, we still have a lower gap down here, somewhere between 25.5 and 25.750. But I just wanted to leave you with something as well. If we were to see a controlled pullback, right, that continued in some form of a routine sort of pullback on decent volume, and it was rather structured, I'm proposing the question, well, maybe it would look very closely or very similar to that of a bull flag continuation. Now, again, I'm not going out on a limb and placing all of the analysis in this simple fact or this potential likelihood sort of playing out, but I'm just saying that there are a lot of bullish remarks underneath this market. And instead of, again, buying into the negativity of the market, right, that is the natural consensus. Understanding this, that the market itself, I wouldn't say is complacent. If anything, at the moment, it's really stricken by fear. I believe at the moment, the prevailing sentiment of market participants, active and non-active, is that of fear. And generally up and around market peaks, okay, that is not the case. Just think about that for a moment. When you're at the beginning of a larger correctional pullback, or at least a material sort of recessionary fear, generally the sentiment of the market is jubilant. It's very opposite or very different to where we find ourselves right now. There's a lot of people, again, rather sort of gloomish on the market for the right reasons, but just a little bit early. And all I'm saying is that, in my opinion, just sitting back and having a looking sort of through the window into the dynamic of the market and what the sort of the prevailing sentiment is, all I'm trying to overlay is that this does not make sense to be a market top. Okay, it doesn't make sense on a number of fronts. And I just wanted to leave you with that really as at the close on Tuesday. We're going to follow this as the week continues. But as it stands, in my opinion, this is really good sort of discount buying opportunity and positioning yourselves through calls if you choose to do so. Just make sure the expiration of those options are pushed out well and truly into the future, well and truly into 2020, whereby you can sit back, as I'm doing, allow the market volatility, right, to persist for as long as it wants, to allow the dust essentially to settle prior to the market, again, finding that traction, finding that grit, and continuing on its merry ways. Once the dynamic of sentiment shifts from that of fear to, again, elation, into really irrational sort of buying, which I believe is going to happen through the period of 2020, I'll be the first to sit here on YouTube, publicly and also privately in that pro analysis class as I've spoken about, to say, well, now's the time to be a little bit fearful. But as it stands, okay, now is not the time. Now is not the time. Again, when it comes to our top 12 individual trade list, not the biggest of days, you could say, Apple. In fact, it did hit our target. That was one of the sort of the round trip trades that is done. But again, as I say this, potentially you haven't closed out the trade at 213.28, and I completely agree with you for not doing so. If you wanted to take a portion of those profits up and around this target, maybe you've had a portion to sell. Fantastic. Congratulations. Good for you. However, again, when you look at these individual stocks and the rotation of these stocks back into tech, which have historically led the markets higher, we still have targets on these trades, for instance, on Apple up here just shy of 230. But then it really gets exciting if we were to push above these all-time highs. And I think it's correlating very, very nicely into the state of the NASDAQ as well. A lot of these stocks are basing. They're starting to put in rounding bottoms. And it's sort of intertwined with the indices themselves also pricing in those foundational bottoms as well. When you have a look at Amazon, it's pulling back. Let me just zoom in. We've closed the gap, surprise, surprise, between Friday and also that of Monday's trading session. So this is a very healthy continuation of, again, what appears to be some form of a rounding bottom. So there's a lot of stocks doing this, all right? And I just wanted to point this out. Boeing Airlines, pardon me, I'm getting ahead of myself here. Let me just go through these one by one. Boeing Airlines is still holding above support. It still hasn't triggered yet, but we're paying very close attention. I think one of these coming days, we are going to get a big spike once we close those windows on the market indices, whereby it's going to set off, again, the continuation of the larger trend. Baidu, again, big gap up today. It opened just above 112. We closed at 108, but this is a very healthy continuation out of this extreme oversold setting, whereby I believe that we're starting to put in a macro bottom for Baidu, and we're going to see a transition of sentiment and also price direction play out over the coming months. So something to think about there. We still have a couple of open windows on that individual stock, but I think very certainly that the dynamic has shifted. Okay, so I just wanted to point that out for you. Has Caterpillar triggered? The answer to that question at the close on Tuesday is no, it hasn't, but we continue to stalk these trades with these bullish entries. 119.38. When we have a look at COP, has it triggered? The answer to that question, no, it hasn't. We're starting to see some good volume trickle into some of these individual stocks, which is good. But again, they're still going through the base or the basing pattern which we're seeing on the market indices. Let me have a look if I can bring up Disney over here if my chart wants to work with me. A little bit of a gap down as I spoke about yesterday after the close, but again, it's holding up. No trigger at 139. Google is pulling back a little bit. We've got this really nice trend line as support to actually hold this stock up. And again, when you interlink it into Apple and also Amazon, it also appears to be building a little bit of a base through here as well. So again, a really healthy sort of setup. We've closed the window. This is going back to the 5th of August over here. And as such, we're still largely just moving sideways in a little bit of, you could say, a little bit of an ascending triangle, even though technically that is incorrect to call it that of a textbook ascending triangle. It's not enough time for it to be a legitimate signal. IBM still hasn't triggered, got very close yesterday. We had that shooting star set up, a little bit of a reversal candlestick today. Am I surprised? In all honesty, no, I'm not. And a bunch of these stocks are still operating exactly the way which we expect them to do. This is a process. For those of you who are here listening to this recording at whatever minute marker this is a process. It's going to take time. That's what we're saying. Be patient and be disciplined. I mean it when I say that. I wish these things would just turn and play out overnight, but the simple fact is they don't. It just takes time, okay? I'm not in control of the market, but the market itself is really showing some very nice green signals ahead once we move through the closure of these open windows. Netflix pulling on back down to support. Again, I'm very, very optimistic about this stock, even though we have pulled back from about 390, okay? We're down here at 300 more or less, just below it. But I think once the dynamic shifts and shifts for good, A lot of these stocks are going to go through some very big short squeezes whereby you're going to see these markets rally and rally very aggressively. So don't miss out on that. At the same time, I wouldn't be surprised, again, if you're sitting there with your sort of sitting on your hands, not really doing much, but just sort of focusing on the market itself and watching the ebbs and flows of it. It's all very healthy. It's all very constructive. And again, for those who are patient, they're going to be paid off once all of this volatility settles. In the meantime, pay attention to those Bollinger Bands. Pay attention to the bottom Bollinger Band. Watch for it to turn up. If you see it turn up and if you see price action moving sideways, you can definitively say there is a very high probability that we're moving into a squeeze whereby, again, when you think about it in context of the simple moving averages, it makes sense as price action coils between both the 100 and also the 200 simple moving averages. I'm just flicking through the charts right now to show you this setup, and that's exactly what happens during, or in this particular instance, a Bollinger Band squeeze right between the longer term simple moving averages of the markets themselves. The best market to show you this and the representation of this is certainly the Dow Jones Industrial Average. So that will do us as at Tuesday. Again, I feel as though I'm repeating myself, but look, I'm trying to make it as constructive as possible. Once you understand markets and how they move and the application of analysis, sometimes it can become that of a very slow process. But as it stands, again, none of our analysis has changed whatsoever. We're just having to move with the market, and it's taking a very long time. Okay, so that's going to do us as at Tuesday. Have a good evening, everybody. I'll be back with you later in the week for another market update. All the best. Farewell.